In this video, a huge report from Binance on Bitcoin, Ethereum, alt L1s and layer 2s. Who is winning right now and how can we play this going into the next bull market? All of the data is here. It's a massive report, and so I'll leave timestamps down below. We'll get into the report with Bitcoin and how it's behaving right now as it's coming out of its bear market. Also, before we get into the video, I am updating the crypto investor course in the next few weeks. I've got a load of videos on my strategy going into the Bitcoin halving, how to play this with Bitcoin and ETH and everything else. A bunch of videos on the macro environment as well. It's a huge update. I will be updating it. It's completely free if you have the course already. Obviously, the price does go up over time as well. But check the link in the description if you're interested in the course and the updates. If you've got the course already, it's coming free for you very soon. So let's get into the report here with Bitcoin. BTC has increased its dominance over the last few weeks. Now, this is totally normal for this part of the cycle. We're going into the Bitcoin halving, so this is when Bitcoin should outperform. However, there are a bunch of other narratives that are performing extremely well right now. So let's see this. Firstly, as we can see, what we're seeing is just Bitcoin and ETH outperform. Now, remember when this report was written, just a lot of regulatory action, right? So some lines are being drawn. It looks like, you know, the big players in the States at least are drawing Bitcoin and ETH out and then trying to kind of destroy everything else. Now, that's not working. We've seen XRP. They actually won their case against the SEC. The SEC might appeal. But anyway, it seems pretty positive for the next few years that in case law right now, you know, altcoins are not securities by default. So you're looking at altcoins having a clear path to actually try and innovate and bring some value over the next bull market. But flight to safety, and certainly in this part of the market, you are looking for Bitcoin to outperform because the halving is coming up. Altcoins may be coming up towards, you know, the end of a bull market, but we're way away from that right now. So a good opportunity to get into some narratives that you think may play well in the next bull market. Now, interestingly for Bitcoin, what I really want to look at, right, is it growing? Because the real question as an investor is it growing, right? Can I be confident that this thing that I'm buying is actually growing over time? And the price is going to sort itself out over cycles and over time. If you're buying at relatively lower prices, if you're confident that it's growing, that's good. So what we can see here is active addresses, 7-day moving average. This is looking at the 1st of Jan 2023 to the 30th of June 2023. So we're seeing a growth here, right? Active addresses is growing up. We've almost got 1 million active addresses in the Bitcoin network. We'll get onto Lightning in a second. Why this is important is really the best metric for me for just fundamental growth in Bitcoin is how many people, how many active addresses are there? Now, this isn't people because people can have more than one active address, etc. But what we can see is that at this time in the previous bear market, right before the bull, you're looking at an average daily active addresses of around 700K, something like that, right? Even down here, it's way less, around 600K. Now you're looking at that in this bear market, or just coming out of that, you know, an average of, let's say, 900,000, just under 1 million. So there is a huge amount of growth, right? You're looking at 30% plus growth in daily active addresses from this bear market to the previous bear market. It's very, very positive. That shows a fundamental secular growth in the adoption of BTC. And that's really it. You know, does the thing that you're buying actually have real growth in its network? If it does, then you can be more confident to buy through those cycles. So that's very good. The second thing is Lightning Network capacity. Now, Lightning Network is really important for BTC. Payments network reduces fees to a fraction of a penny, instant payments. I've used it before. It's very, very quick and easy to use. There are some drawbacks, but there always are. But you can see here it is growing. 93.4% change in Bitcoin Lightning Network capacity. Very, very strong. Here is that capacity as well. It's still low, but it is growing. You want to see the blue line here. This is the amount of Bitcoin in the Lightning Network. We're looking at around 5,000. There's been a big dip recently, not really sure why, but you're looking at around 5,000 Bitcoin, which is around $150 million worth of capacity. So still extremely small in you know, worldwide terms, but you can just see this is growing, you know, exponentially over time. Now, this is very, very positive. So you have a very cheap, low cost, instant network for transferring Bitcoin back and forth, but also Lightning Network is trying to bring on other assets and other tokens as well, for example, stablecoins, which just gives the world a, you know, very trustworthy, solid, cheap, fast, efficient payments network, which is obviously a good thing for the world, a good thing for Bitcoin and its price as well. We also have some price performance here from Binance. They've looked at Bitcoin versus other assets. It's always great to see this just to see how it's performing. Bitcoin is the best performing asset out of these this year. Now, Bitcoin performance year to date has outperformed Ethereum as well by a little bit. They're both up a lot, right? So, you know, year to date isn't really important, I think. So that's why I've written this right here. Year-to-date performance is a vanity metric. Doesn't mean anything because Bitcoin fell way more than a couple of these last year anyway, so it should be up more. It's got higher beta, so it falls more and rises more during cycles. If you dollar cost average into these investments, so you put 100 in a week or 100 in a month or whatever it is, the performance of BTC over 1 year. So if you started dollar cost averaging a year ago, you're up 35% if you dollar cost average just regularly once a month or something into BTC. If you're over a 2-year period, you're up 6.5%. So let's call it flat. Now that's actually underperformed other assets. You've underperformed the NASDAQ, you've underperformed the S&P, I believe, during that time because you were buying at the very high of Bitcoin for a very long time. That's a little bit unfortunate. And so over 2 years, it's not actually done that well. Where if you go back 3 years and 4 years, it's pretty much outperforming everything else. Especially 4 years, you're up 78%, over that time. So the vanity metric is good. Dollar cost averaging, though, as you can see, is also very good, right? So you're flat over 2 years. But if you're buying during times when Bitcoin is a lot cheaper, you can see when it rises again, you start to make those very, very high percentage returns. Binance also give us great data on alt L1s, so Ethereum, Solana, BNB, as you can see here. Cardano isn't in here, even though it's a top 10 coin, and the DeFi ecosystem is growing significantly and very fast, and the TVL is growing very fast as well. There's no data here, unfortunately, from Binance. So what I want to compare anyway is really two things. The first thing is active daily addresses, and then the amount in dollar terms that are transacted per day. The way that it seems that blockchains are actually valued is essentially a network valuation model. So how many people are using it, but how much are they transacting? So you can have fewer people using a network, but if they're transacting way more per transaction, that's actually very valuable versus a lot of users having essentially not much dollar network activities. You can think of it as a country as well, right? The country that simply exports the most in dollar terms per user has a high GDP per capita. If you want to think of these as kind of network states. So daily active users, you can actually see that Ethereum is not number one. You have both Tron and the BNB chain that are very high up here. So BNB and Tron have a bunch of users, a lot of users. Now, those users are much lower value to say, so they're paying much lower fees and they're sending a lot less each time. BNB has a lot of just network to network transactions between exchanges, and they have a lot of gaming actually. So you can see a lot of the transactions here are just a lot lower in value. Now you can see the transaction fee, ETH is miles ahead, right? So $6.5, $6.50 per transaction in fees. Why is it so expensive? You think, why aren't other assets worth more if ETH is so expensive? Well, it's like living in New York, right? New York is expensive for a reason. That's because everyone wants to live there because of the advantages of it. Ethereum is just simply the most credibly neutral place to do business. And so people pay a premium for that. And they seem to be extremely happy to pay that premium for the security and the neutral, credibly neutral layer that they get, the settlement. So Ethereum is still, for me, the sweet spot of decentralized, credibly neutral, and it's charging more for that, and actually users want to pay that. But there are other use cases. For example, more users can pay less money and transact lower amounts on different networks. To carry on the theme of credible neutrality as well, it's very interesting to me that both Binance and Coinbase are building on Ethereum, and this just really leans into the fact that Ethereum is really now something that is a industry standard, right? So it's become as decentralized as it is, and it's a network and a standard for issuing assets and building applications on top of that genuinely is not a threat to anyone, but is actually just an important network stack that people actually have to use because the base layer that clears and settles is credibly neutral. So what I mean by that is, what you can see here is that BNB obviously, pumping their own bags here, talking about what they're doing. But BNB chain is building something called OPBNB. As you can see here, this is BNB on the Optimism network. Now, Optimism is a layer 2 on Ethereum. So what they're doing is using the technology stack that Optimism has and are actually building an Ethereum layer 2. I actually said this a long time ago in the crypto course when I was looking at alt L1s. I was saying, why don't some of these alt L1s actually become layer 2s on Ethereum? And it looks like they're keeping their L1s if they have L1s for that use, but they're also building on Ethereum. So you can see here that OPBNB is an L2 solution that leverages Optimism's OP stack to build an optimized scaling solution for BNB chain, capable of over 4,000 transactions per second, with transaction fees as low as $0.005. So very, very low transaction fees, very, very high transactions per second, building it on top of Ethereum. So you've got the BNB coin, which is for that ecosystem, which will benefit from transaction fees paid, but Ethereum is going to benefit from that as well, because layer 2s buy gas from Ethereum. And so they pay gas, they pay for that settlement. Now, Coinbase are doing exactly the same thing. I think the reason why Binance are building OPBNB simply to compete head to head with other networks that are doing this. So this is Base. This is also built on the OP stack or the Optimism stack, and they are building an ETH L2. So what we're seeing here is Ethereum, because it's credibly neutral, you have competitive networks building on top. So Coinbase and Binance would never, come together to build anything together. However, because Ethereum is just this network infrastructure, they're both building on that because that's where the users are and that's where they want to serve their users. The amount of projects that are building L2s and applications and building projects around Ethereum L2s is really insane. There's just nothing like it in the industry that is this big in terms of the scale, the amount of people, the amount of money that's flowing into this. And so that's why you have to pay attention, because the next bull market, this is going to be just where a lot of the money has flowed into. And so things are going to come out of this that are going to surprise. And I think ETH is just the play here, the layer 1 coin. Of course, if you want to take more risk, you want to play some outperformance during the bull market, then some of these coins are to be looked at. I'm going through this way more in the crypto course updates. I also have a video. Go and look at the layer 2 landscape video I made a few days ago. It's on the channel. Goes through these layer 2 networks in a lot of detail about what they're doing, what they're planning. So check that video out as well. As you can see, the L2 boom is started to show itself throughout the end of the year and has been touching new heights in 2023. While optimistic roll-ups saw the first initial wave and is still command the lion's share of the market, ZK solutions have been catching up fast, particularly with the launch of numerous ZK EVMs in the last few months, mainly Polygon as well. Polygon have launched their ZK EVM. ZK Sync are also right up there in terms of TVL as well, although a lot of airdrop farmers there. But the competition is heating up. All of this competition is just good for Ethereum and its price. I'll show you the data here in a second. As we can see, Ethereum's expensive. So you have a lot of alt L1s who have just competed with ETH because they're cheap. So yes, we're more centralized, but we're cheaper. And that is a use case for a lot of people. A lot of people just want cheap transactions, can't use ETH. Well, now they can use L2s. And so this is a huge competitive advantage for Ethereum, having more security of ETH, and then the layer 2 as well, which is cheaper. Now, are there some security constraints with the L2s? Yes, but there's pros and cons with everything, right? So what we can see here is cost to send ETH is 15 cents, 10 cents, and the cost to swap tokens is under $1, which is way cheaper than Ethereum. So if you're in the Ethereum ecosystem, you have assets there, or you just think that that's the better place to be because there's more development, more applications, then you can move them to L2 and just get these cheap fees. Now, Vitalik has said that in the near future, he expects total transactions per second to be around 2,000 TPS on Ethereum and its layer 2 networks. So that's obviously going to be a lot of transactions per second for most of the use cases over the next few years, in my opinion. And as we can see, the L2 scaling factor here. So L2 Beats, which is a site, I'll link it in the description. The scaling factor as of right now is 4.29x the base layer. So as you can see, this blue line is Ethereum base layer transactions. They're not trying to make those quicker. Ethereum is about security. And so it just has its, as you can see, 12 transactions per second most of the time. And it's just going to stay there. But it's going to give the layer 2s the opportunity to increase transactions per second. So 4.29 now, and I'm sure it will get ever higher. You can see also the transactions per second on L2 physically now is way higher than the Ethereum base layer. So this type of scaling during a bear market is really exciting as an investor, because what you're seeing is genuine adoption here, just the proliferation of this network whilst prices are at their cyclical lows, which is a super interesting opportunity. Let's have a look at the data. We're in a bear market, or we're just coming out of a bear market, but it certainly isn't a peak of activity. And what you can see is that the Ethereum token is deflationary, right? So there is just an amount of activity on the network now, on the L1 and the L2s, that is more than the issuance of ETH. And that is obviously extremely pleasant as an investor to have an asset that is just simply in demand and is being reduced in supply over time. So the supply growth over a year was looking at 0.3%, right? So flat. We are not in a bull market. We're not at a peak of any of this right now. We're just at the start. Both cyclically, we're at a cyclical low coming out, but also just from a network growth perspective, we are way in the early stages of all of this. And so if ETH does become this settlement layer, maybe for real world assets, maybe for some of the big institutions to settle on here, things do get crazy if that happens, and ETH is going to be significantly drawn down in its supply, which is very productive for the price of ETH. If we come down here as well and see who is actually buying gas on the network, we have Uniswap here, which is obviously the transaction of tokens, which is going to be a huge app for a very long time. But we can see that Arbitrum here is buying a ton of ETH. We also have Optimism, and I think we have ZK Sync somewhere as well, which is this ZK Sync Era, and then ZK Sync Era Diamond Proxy here. Starkware as well, which is another L2. So these L2s are huge gas users. So you can see that there is demand for L2s and there's demand for cheaper block space in the Ethereum ecosystem, and they are becoming gas guzzlers on ETH, burning ETH. And so very positive for Ethereum as an ecosystem. Even at this time, the token is going negative in supply, meaning there's simply demand for ETH. So you're buying a commodity that there is demand for with a reducing supply over time. And obviously these fees are paying staking yields as well, which is currently around 4%. One thing that worries me a little bit about layer 2 tokens as an investment is really how the long-term strategy is for accruing value, because these aren't really currencies, right? Bitcoin and ETH can be considered currencies. Certainly Bitcoin, or a property asset, very, very different. It's got a proof of work network, and it's just a different thing entirely. Whereas these tokens for layer 2s are really just looking for, people to use them a lot and pay fees. Now, obviously the competition here is going to drive down network fees to be as cheap as possible. And really what you're looking for is for one of them to be a monopoly, right? Monopolies, like the tech monopolies, have pricing power. But if there's a lot of competition on these networks, how do they have pricing power and how do they make profits? Because they can't sell advertising like Google does on YouTube, or they can't create value like that. And so the only way they create value is just charging fees. But obviously competition is going to drive this down to the lowest common denominator. So are they really good long-term investments? That's a big question for me. I don't think it really matters over the short term because narratives take place and bull markets take place. But as you can see, the OP mainnet actually went through an upgrade where they reduced transaction fees a lot. Now, this is good in the short term because you're attracting users, you're attracting TVL. So that's something that's obviously important. And at the moment, it really doesn't matter because you've just got this huge growth in users and transactions. So making them cheaper is fine. But, when the products mature, how do they actually grow revenue and grow their profits as a chain? Because that's going to, impact the investment case. In any case, as you can see, users are just on the way up right now. So this is Polygon, ZK EVM showing huge growth in TVL, so dollars put on to that network and unique deposit addresses. Polygon proof of stake has been around a long while as a network, but people are moving over to the ZK EVM because it's a proper layer 2 on Ethereum, and that's where people want to be. So for right now, these stats look great, and I'm sure in the bull market, these narratives are going to drive up prices. Over the longer term, there's a worry about how a network that simply charges fees actually is sustainable and has a decent profitability to actually give value to a token over the long term. Binance also touched on DeFi, which has taken a massive hit in this bear market, especially all of the regulations surrounding tokens and the SEC suing everyone, right? So everything gets hit. But the XRP ruling was great for altcoins and DeFi, showing that altcoins are not securities by default. At least that's what's decided in that court case. maybe the SEC appeal. It's going to take many years to appeal that though, and they may not win any appeal either. For right now, I think the landscape's actually pretty positive. People can develop for these, DeFi primitives, and these applications can exist. The tokens are not securities. It's different in other countries and jurisdictions as well. It's not just the US. Mostly positive with some fair rules of the road for innovation in most places. So what we can see here is that unique monthly active users are growing. We can also see that decentralized exchanges have actually increased their ratio of trade versus centralized exchanges. I think this is just a knee-jerk reaction to all of the suing of Coinbase and Binance, essentially, people moving their assets off those exchanges. What we can also see is that Ethereum is, keeping its huge grip over the industry. So it's not really losing any TVL despite many other chains trying. 58% in January 2023, moving down to 58.4 again. So exactly the same. About 60% of the industry is just on Ethereum. And then the layer twos, you can see Arbitrum here moving, that's a layer two, right? So that's Ethereum as well. BNB chain may move some of their TVL onto their new network. And then you have Polygon, which is essentially a layer two as well, and Optimism, etc. So ETH is extremely dominant in this market, and so kind of has to be part of a portfolio if you're looking at investing in cryptocurrency. And what we can see here is this is kind of a new primitive of DeFi. Now that Ethereum has staking, a lot of users that have ETH obviously want to earn yield on their ETH, and they can do that in many different ways. So you can, of course, just lend it out on DeFi, and that's what people have done previously. But now what people can do, or at least Eigenlayer is trying to do, is use the security of Ethereum and its protocol to actually secure other protocols. So you can have other protocols and other layer twos that use part of this Eigen protocol or Eigen protocol, and it secures parts of their protocol. So maybe the data availability layer or something else. So ETH holders can actually stake their ETH, not just on the ETH protocol, but they can put it over to Eigenlayer, and that can secure other layer two networks that may actually pay higher fees than the ETH base layer. So you can restake the ETH. So this is a new primitive. I won't make any comments about if it's going to work or how successful it will be, but it's a very interesting thing to do, or actually using your ETH to secure other protocols that may be on the layer two that may pay, just higher fees for what they need to get done. So Eigenlayer is one of the key projects propelling the advancement of the restaking sector, positioning itself as an Ethereum restaking collection. They aim to establish a marketplace for decentralized trust by permitting Ethereum stakers to leverage their staked ETH to secure other network applications, earning revenue in the process. Extremely interesting how you can just see the innovation happening in blockchain, and the way that you can move money around instantly and move money and security around to different protocols is actually really insane, something we've never seen before. And that's why there's so much excitement in all of this. I just covered a fraction of the Binance report. It's absolutely massive. I will link it in the description. If you want to see my latest updates and my strategy going into the next Bitcoin halving, that update is coming. Check the crypto investor course down below. Buy a bit deposit bonus if you are a trader. I'll link down there as well. I'm James, Money ZG. Cheers for watching, and I'll see you in the next one.